Hello, Jim here. Today I'm going to share with you two of my best trades last month. What's interesting is they were both wheel trades, so I didn't need a whole lot of capital. I'll share with you the details of what the two securities were. I'll share with you how much I made for each of them and how it really required very little capital. And then finally, we'll take a look. Can you still make a good trade with these? So stay tuned. I think it's going to be well worth your while. Okay, now I've opened up my planning worksheet from last month. I haven't done the totals on October yet. I'll probably do that later in the month. I share my planning worksheet with my membership. Typically every Sunday. I sent it out, the updated one for November this morning. And it contains a lot of information. So I'm just going to talk about the two most profitable trades, which I've sorted this spreadsheet by the profitability ROI. If you look over here, these two trades, one was 387% profitable and the other one was 288. Now I know I'm going to get some comments that, well, they're still open, and that's true, but with the amount of premium you could bring in for each of these trades, and we'll talk about each one individually. The first one being Cart, which is Instacart. I use them. If you watch my previous videos, I'm probably going to use them later today. I don't like to grocery shop around this time last year or a little bit later in the year. I believe I ended up with the bad flu, and I probably picked it up at Publix or Kroger. So I would prefer someone else to shop and not run the risk of getting sick again. It knocked me off my game for a good 3-4 weeks. So I definitely want to avoid that and potentially avoid the grocery stores. So I like them. They've been hit kind of hard recently. Concerns that maybe Amazon will beat them at their own game, but we'll talk about that when we go into, I will share in Seeking Alpha what they look like. But I did this trade on T10-3 in my Fidelity Roth. It's a vertical put credit spread. And you might ask, why didn't I just do it as a cash secured put? I always tell people, if the long put is cheap, then buy it. And in this case, the 34 long was fairly cheap, and I went ahead and bought it. I do take a little bit more risk with my wheel trades. So I did a 31 delta with my long vertical put credit spreads that I like to go farther out. I usually do a 15 delta, but when I'm rolling it and I feel like the stock is a bargain, and I do think Instacart is a bargain at this time. The expiration was originally 10/31, so less than a month, more like 28 days. At the time, or the last time I published this spreadsheet, it was 39.15. It has come down a little bit. And I picked up 274.66 in premium. Capital required was 925, and you just calculate that by taking the spread. So the 37 minus the 34 times 4. No, I didn't do 4. How many trades did I do? I did 4. So 3 times 4, which is 1,200, or 3 times 4 times 100 makes it 1,200 minus the 274.66, which brought me to 925.34. And that's why the return was so high. This is an annualized return. And the assignment coverage, and one of the members asked to include this column, so I went ahead and I did include it. That's if all 400 shares get assigned to me. That's what the assignment coverage or cost would be. Now, if we look at them, Cart, as you can see, it's pretty near its 52-week low. It got down to 34.78. So it was as high as in the low 50s very recently, back in August. They have a low PE, 2035. We look at their profitability. They have good profitability. Their CapEx could be a little bit better, but very good cash flow. I mean, they make about 149, almost 150,000 per employee. Growth is pretty good, A minus. They're growing revenues 10%. They're growing earnings, EBITDA, almost 24%. Valuation gives them a C. So they're not overvalued. At least I don't think they are. Capital structure. So they only have 37 million in debt. That's almost like having no debt. They have over 1.6 billion in cash. Other types of securities, they have quite a bit to fall back on. They don't pay a dividends earnings. You can see they barely missed earnings back in 8.7. Now, this is a concern if you look at making a trade pre-market. This is Monday. This is tomorrow morning. So they're going to announce earnings tomorrow. So what's happened recently is if any stock misses earnings, they just get hammered. I mean, 20, 30, 40% in some cases, which I think is completely crazy. So a good company, if they do get hammered, it's a wonderful opportunity to try to pick them up ultra cheap. So I'm keeping an eye out. I'll be looking to see how they do in the morning. I did a trade on them again. So this trade I just showed you is closed. So a lot to like. Now, one thing I do like to look at is, where are they going with earnings? So they're projecting 181 this year. So $1.81 in earnings. Next year, 221, which is almost a 22% growth. Then 247, then 278, both around 12% growth. Then slimmer growth, they're going to 280 and 29, and then 2030 they're going to have pretty close to 12% growth again. They're going to be 312. So fairly good growth. You should do fairly well. Will it double in 3 or 4 years? It might not, or they could be a takeover target. Someone else may decide to buy them, like a Walmart or somebody like that. I also like to look at financials. Are they buying back shares? And they are. Well, wrong place. Supplemental items, you can look at shares. So 264, 263. Yeah, so they've come down. They were at 266. They did issue a lot of shares back in 22, but then they've been buying back. They went from 266 to 264 to 263. So they are buying back stock. They're not diluting people. I prefer to see some buybacks. I'd rather see fewer buybacks and then putting the cash to work. But I'd rather, again, see buybacks versus, issuing new shares and diluting people. So everything looks fairly good. So could we potentially still do a trade on them? So if we look at 1212 to see, well, what does it look like if we go a month out? So today's the 9th, tomorrow's the 10th. The 12th is right around 30 days. So this is for one contract, but here we have the symbol. This is Schwab. This is the old environment, which I still use it because I've been using it so much. It's just secondhand to me. I'm doing it as a vertical put. It's currently 37.1, so it's right there, right at that same. If we look back at the trade I did before, it's right in that same range. It was 39. It's 37 now. So trying to move this. Let's go back. So I'm saying, well, I want to sell to open one contract of Instacart, expiring on 12/12, and I want to do it at 35. So I'll go a little bit lower. Let's look at what the delta is. The delta for that is 38, which is okay because I think 35 is a fair price. Then I'm buying to open one contract long put, meaning I can put these shares to someone else. Again on 12/12, and it's over the weekend, the numbers can look a little bit squirrely. So it's saying here I could pick up $85 for a $500 spread for literally a month. So the return would be pretty good if I can get one-on-one, meaning I make $50 on a $500 spread, I'm doing okay. But if I can do 85, and I probably would go higher. Now, typically you wouldn't have this huge discrepancy, but let's say that was 95, I would probably go up to 95, or 90, say it was 98, I might go up to 95. Then I'd probably, just like last time, go up to 4 contracts because, that's like $140 stock. So if you take the 35 times 4, that's like $140 stock. So if you're dealing with a really expensive stock like a Google or And Amazon, I believe Amazon's 240. I think Google's like 270. So you can do more contracts. Now, if you're just getting started, you're new with trading options, then I suggest to people until they get used to it and they've been doing it a little bit, to go ahead and just do one contract. And so in this case, you could potentially make $95. So you would review the order, place the order. If it doesn't go through, it doesn't get filled, then you can replace the order, and you do that under order status. So that's the first one. Let's jump into the next position that did really well last month. So hold on, let's jump into that now. Okay, now my second most profitable or best trade last month was a new one on Ethereum Trust. This is an ETF. And I decided to kind of look at it like I do Mara. I want to learn more about Ethereum. So I'm going to wheel this ETF and just see how it goes. It has really good options, premium options, volume, and interest. So far it's worked out really well. I opened it in 1028. And it had an 1121, so another trade that was less than 30 days, 35.30 at the time. It was 38, and I did a $5 spread. I did 3 positions, so I went a little bit less since I was new with this or thinking through it, but I could very well have done 4 versus 3. Over here, I made 238 on the 3. My required capital was 1261, so it was a 500 times 3, or the $5 spread times 100 times 3, minus the 238, which brought me to 1261. So my required capital is 1261. I had a 288% return. Again, a lot to do with the shorter DTEs, which was only 24 days. And then my assignment coverage, if those shares are assigned to me, and this isn't right, it actually should be 10,500. But this is based on the required capital. So again, a pretty good premium now, and that's where I come up with just these 2 trades. I made 514 or 513.64. So if you round it up, it's 514 on literally $2,186 worth of capital. So if you have a really small account, you could potentially make these trades in that account, and you would have made 514 on, say you had a $5,000 account. That's a huge kind of return in 1 month. And that is if you only made the trade for 1 month. So now let's actually look at, so it's, again, a Ethereum mini trust ETF. Has pretty good reviews from Seeking Alpha, and it's been as high as 45 and as low as 14. Now it is relatively new. They just started it back in July of 24. So if you're dealing with it around 35 or 40, I think you can potentially do pretty well. Now, instead of buying shares outright, I decided to run the wheel on it. So holdings, it's just primarily Ethereum. Ratings, again, pretty good ratings. Momentum, pretty good momentum. Expenses are relatively low, which is nice. I don't think it pays a dividend. It is a little bit risky, so I am taking some risk with it, but that's why I kind of like wheeling it more so than owning some Ethereum, but it's forcing me to learn a little bit more about Ethereum. Now, can we still do a trade with Ethereum? So here, let's look. I brought up Ethereum, again, doing a vertical put credit spread. I like to do it as a spread. That way, if it just gets hammered and drops all the way down to $10, which I don't know that could happen, but who knows? Maybe it could. So I'm going to sell the open 1. I want to do it right around let's see if we can get down as low as 28. And I want to go a little farther out, of course. So let's do it as a little bit more than a month. Actually, let's do a little less than a month. Let's do 12.5. So both those for 12.5. So 28, that's a 25 delta. Let's go a little bit higher then. Or, Yeah, a little higher. Let's see what that is. 29 is a 27 delta. So we could even do 30, and that may have been my original trade. So let's do 30. That's and I'm looking right here, delta right here. So it's 32 delta, 0.32, which is okay. Again, since I'm wheeling this, if it gets assigned to me, I'm fine. I would take those shares, then sell a covered call and lower my cost basis and kind of keep running the wheel on it. So here, let's go a little bit lower. Let's go down to, we'll do 25 again. And was that the same trade? Let's look. If we look back at my current trade, 35.30. So this trade would be 30.25. So you could potentially go even lower. So for this, and it's less than a month. How many days is it? It's 26 days. So again, the return would be really good. But I'd bring in 114 per contract. My required capital again would be 500 minus the 114, so like 386. So I could do, if I did three contracts again, I could bring in 342. I could potentially do a little bit better I believe the last one was 21 days. This is 26. We could see, well, if we go back to the week earlier, what does that look like? 1128, which would be 19 days, and we could do 30.25. And then we have some weird numbers here, but let's go back to the 12.5. So the weeklies, they're both weeklies, but the other weeklies were a little bit odd to look at. So again, if it looked like this, if it was 240, I would do my first order above 114. So again, I'm selling to open 3 contracts, Ethereum, expiring on 12/5 at $30. So I'm okay to own them at 30. And then I'm buying a little protection. I'm spending probably, I don't know, I'd probably be spending closer to 50 or 60 cents. Now they do have fairly good volume. So again, being on the weekend, the numbers do look a little bit odd, but I'm buying downwards protection at 25. I'm buying the put. So a net credit would be 114. So if this was truly 240, then I would go all the way up to 240. And you can see that's 720. So that's probably, again, the numbers are a little bit odd, but then I would click review the order. And then if I liked it, I would place the order. If it didn't get filled, then I would look at the order status, and I could lower this limit price by another $5 or $10. If it looked like this on Monday, then yeah, I doubt I could get it for 720. That would be an unbelievable return. But it looks like you can still make these trades. It has, if we go to bar charts and we go to ETH, let's just look at the option chain. We'll look at that option chain. So we'll go to 12.5. And the numbers look okay. That's calls. So here's puts. So not huge open interest. Now, if we did the monthlies, and a lot of times I prefer to do the monthlies, we could look at the monthlies, and the numbers are a lot better. You can see 23.51 for doing a $29 call, and then for doing a put right at 29, and you can see the numbers are pretty good. You have fairly good volume. So far I've liked to trade it, and if I can make $1 or $2 on both sides, so like with my 35.30, if I sell those 30 because it gets assigned to me at 35, then my cost basis would be like 32, 33. Then if I can come up here and sell a covered call, maybe in the same area, my cost basis suddenly will be down to 29, 28, and then I'd be making some pretty good income. So it does look interesting. It does look like this is going to work out pretty well. Now, if you follow me in my membership, if you're one of the members, again, I share all these trades. I post them to Patreon, then to Discord. We discuss them. We talk about them. I encourage my members, if they don't want to do 4 contracts or 3 contracts, then do 1 contract. If they want to take less risk, go with a lower delta. So a lot of people do change the trades. Some people don't sell covered calls. which actually is worked out really well. A lot of the covered calls, like with something like Ethereum or even Card, if it shoots through the roof and you've sold a covered call, suddenly you're deep in the money in that covered call and you've kind of limited your upside. So I, again, encourage most of my members or all my members to look through the trade, decide what they want to do, how they want to do it. And if they do adjust it or change it, I ask that they mention it in Discord or even back in Patreon, and most of them do. So that's what I wanted to share with you guys. Just wanted to talk a little bit about how some of these wheel trades of these inexpensive stocks can be your best performers. And I plan to do more with these. And like I said earlier, I'm going to be looking at Cart. I'm curious to what's going to happen with Cart. Now, when you see this video, it would have already had earnings, so it'll be interesting. I think they're going to probably have okay earnings. I'd be surprised. But if they miss earnings like a lot of the others, they may drop 10, 15, 20, 30%. So hope you guys enjoyed this. Thanks for taking the time to watch, and I hope you have a wonderful day.